All right, so the last session we did cover a few basic stuff like the indices are um, what New York Stock Exchange, what are the securities and stuff, and what's a candle. We just kind of like briefly touch based on it. Few of the folks are joining in new, so I thought it would be a good idea to just do a kind of a recap. Um, so as we did discuss last time, um, my mentor keeps on saying candle is the best indicator. Um, like of all the indicators that are out there, candle is the best indicator. So he basically started his sessions when I took the training with a candle, like a, a bear candle, and went to kind of showing the indicators and oscillators, and then kind of narrowed it down to just three indicators of 28 indicators that are there. But generally what I've seen, the day traders and the technical experts and stuff, they kind of narrowed down their usage of indicators to a few, um, sometimes just a couple, and sometimes just limit those indicators to three. So I would like to also stick to that idea of limiting the indicators. As though more indicators you add, the more confused you get. Um, so let's start with the recap that we looked at a candle last time too. Um, it has four components to it. Uh, the main body, and then you have the wick at the top, the shadow that you see up top, and then the shadow that you see at the bottom. So the bottom of the wick here, it's the lowest price of the day, and the top of the wick is the highest price of the day. The main body of the candle itself, um, this could be the opening or the closing of the day, or this could be the opening or the closing of the day. So if the body is black or red, if the stock closed lower, that would be the color of it. If the stock closed higher than the previous day, then that main body tends to be white or green. Uh, I think I had a question last time, what's the difference between a hollow versus solid candle? It's just like kind of a, how you have uh, different indicators, the same way how you represent it, like as the charts in terms of as a bar chart or a line chart, or as a candle chart or a hollow candle chart. So it's just like how it gets close. Like if the closing is higher than the opening and the closing is higher than the previous close, that's when you see the hollow green candle versus what you see with the red hollow candle. I'll just show you, like if you look at it. I think we looked at an example last time too. If you look at 9th September, so let me just close this Fibonacci channel. So let me just zoom in here. So if you look at this, this is what I was talking about, a candle. So this is the main body. It has a wick at the bottom, wick at the top. So if I hover my cursor on it, you can see four numbers here up top. So if I hover on 9th September, so you can see on the top, the opening is 3315.25. That's when the market opened that day. And the closing was 3400.25. So from 3315, it went all the way up to 3400, the closing. So the opening was lower, the closing was higher in this case. You can see it on the right side, these numbers. You can see the 3400 right here, right? And if you just move the cursor, you can see 33. I'm just like eyeballing it, But the opening was lower, 3315.25. The closing was 3400. So that's why it's a green day. The buying was more than the selling. It was as shown here. If the stocks close higher, then the body is white or green. That's what we are seeing here. So the opening was 3315, closing was 3400. The bottom of the wick that basically shows the fluctuation of that day. Even though the opening was 3315, the lowest it went was 3295. And the highest it went was 3424. So even though it went higher at the close of the day, that's 4 p.m. Generally the trading is 9:30 to 4. The closing was 34. That's basically a green day, right? As compared to the previous day, or we can just look at the next day, 10th September. If you look here, the opening was 3396, the closing was 3340. It's actually lower than what it opened. It was more of a sell day, so it's a bearish trend. So bullish is like upward trend, more buying. Bearish is like a more of a downward trend, more selling. So you can see the same scenario here. The lowest it went was 3327. The wick that you see here, and the highest it went was 3424. So if I were to just change it to hollow candles, so we can represent the price index in multiple ways. I can do a bar, I can do a solid candle, I can do a line, or I can choose a hollow candle. So that's when you see this hollow green candle. That is basically what is shown here. Closing is higher than the previous close, and the closing is higher than the open. So whatever the previous close was, this closing is higher than that. See the difference? So, and if you look at a bar chart, it's nothing but the same thing. The wicks are same. The opening or the close date, again, looking at 9th September, the values doesn't change. But this line is the opening line, the one on the left side, and the one on the right side. Let me just zoom in a bit. It's the line that's hitting it. So I'm talking about this one. The left one and the right one. It's basically how a candle is shown with the main body on the open and close with these values here. The bar chart kind of does the same thing. It's just like a different representation. Line is basically the same thing again. It's shown as a line instead of a candle. So I guess that was the basic stuff what we covered last time too. Just wanted to touch base. So the next thing, the main important things, as I said earlier too, we have 28 indicators and oscillators. They are technical indicators that kind of shows the trend of the market. Different people have different choices. But my mentor kind of showed the moving averages, the regular moving averages or the Hulse moving average. If you're using the moving average indicator, relative strength index, RSI, moving averages, convergence and divergence, also known as MACD. Take a look at moving averages. So again, moving averages is just like average of whatever the period that you select, So if you